Good evening, everyone. This is John Locke, and welcome to the Locke in Your Success Trade and Market Update for August 18th, 2013. If you're watching this on the SMB Training blog, please thoroughly read the disclaimer and be aware that any information contained in this presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making specific trade recommendations. Also, any trades and or results covered in this presentation may or may not be live trades. In the event anything is computer simulated, we do the best we can to make sure that everything is accurately represented as possible, and also that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. If you are watching this on SMB or YouTube, please come on over, visit our trading blog at lockeinyoursuccess.com and join our mailing list. And check out our ROCK, M3, and Bearish Butterfly video series, and stay tuned for our programs that are currently in development. All right, let's take a look at the markets. If you recall, last week we were thinking the markets would be sideways to bearish, and we started out the week relatively sideways and ended the week bearish. We did break this support level as anticipated, and we came down into this range here. If we take a look at the SPX, we were saying that we did expect, once this trend line broke here, we did expect to hold underneath our resistance level, and we did that, and we weren't too far from our projected close. We're a little bit lower right on expiration, but we certainly passed through that area, and I think we did a really good call on that last month. If we take a look at the Dow, we just pulled back to our primary trend line, and if we take a look at the NASDAQ, we just reset back to a bigger support level here. So the market's pretty much acting as expected. As far as where we go from here, it's going to be a little bit up in the air. We're not sure exactly how far this is going to pull back at this point. I had a target on the Russell, for example, of 1020, a minimal target, and a maximum target of around 1,000. So I'm expecting this to turn anywhere from about where we are now down to, if we have a really deep pullback down to 1,000, that would be a very good buying opportunity to get back in the market. I really don't think we're going that low. I think 1020, possibly to 1010 is probably about it. However, the traders do like the nice round numbers, and the more prevalent support level is actually that 1,000 area. But we'll see if we make it there. So we're more or less calling for sideways movement by the end of the week. How we get there, we may bounce and come back down. We may come whip down a little bit and come back up. But for right now, there's a lot of confusion in the way the charts look. They're bearish or bullish depending on what you look at. So that usually indicates more or less of a sideways market. And like I said, I thought the pullback would be a little bit more. If we shoot over to our positions, we find that August has expired, and we have some results for you. If you remember, the bearish butterfly got absolutely hammered in August. The buy date, if you did buy the guidelines, the buy date was right at the bottom of this huge rally we just had. And of course, as we said, it is a bearish butterfly. It's been a very, very bullish year. We've had multiple extended runs in the markets, and the trade just doesn't like that. So that makes for one of the worst years we've actually seen with this thus far. The good part about this trade is it can turn around really quickly if the market flattens out, and you can get the money back relatively fast. But as of right now, we took 31% off of August, which brings the yearly total down about 40.9, and that is mainly because of the very, very bullish environment that we've been in. It was just a situation of really, really bad timing. We entered at the bottom of the market here. We entered, I think, at the bottom of the market here as well. And it just happened to be 56 days expiration. Had we been off that a little bit, we could have held the trade. But that hasn't been the case. The time has just been really bad. So it is what it is, and that trade's been kind of getting hammered. The M3 trade, because of the extreme bullishness, tends to not make a whole lot of money when the market goes up. So we've been dealing with mostly a flat environment for the year in this as well. We're currently up 5.6% for last month. That puts us up about 3.1% for the year, which is not a great performance. Again, the students who've been either doing a little bit of market timing or just kicking this slightly bullish have actually had a decent year, and they're doing fairly well. But as far as straight guidelines, rules, we're up about 3.1%. So that's doing fine. The ROCK trade, which happens to do very well in upward trending environments, even though it's positioned slightly bearish, has been doing well all year, and that is up 142.5% for the year. And last month it pulled in exactly 30%, which is higher than its profit target. And of course the old V trade, which also tends to do well in uptrending markets and low volatility, pulled not a strong showing of about 4.7% this month, and that for the year is up 40.4%. So that's how we're looking as of August expiration. It gives us a return on our planned capital, which is the expected capital needed for the trades, of 36% for the year. And it gives us a corrected annual return for the entire account of approximately 18%, which is below what we expected. And a big part of that is this bearish butterfly, which, like I said, has been getting hammered this year. If this straightens out here, we may actually be able to make this 95%. We still have 4 months left. We shall see. Overall, should be a good year. Okay, so let's take a look at the current September trades and see how they're doing. And we'll go ahead and start with the V Condor for September. This trade has had no adjustments this week, and we've just kind of been sitting here. It is up $1,472. If we take a look, it's positive 37 delta. If we take a look at our analyzed graph, everything's looking perfectly fine. If you remember, we widened out the straddle earlier in the week because we've been kind of hanging in the center and not moving anywhere. So this is doing well. If we stay in the middle here, I should be able to bump this up to maybe $4,000 profit. If we start getting a lot of downside movement, we're going to have to kick that back some probably. But as of right now, everything's doing well. If we move along to our September bearish butterfly, this trade is up $4,300 so far for the month. We're 2/3 scaled in. I don't believe we had any adjustments this week. We did not. And we're sitting here a little bit more positive delta than I'd like. If we swing down to around 110.20 and take off again to the upside, that's perfectly fine. If we go much further than that, we're going to have to deal with that a little bit. But as of right now, all is looking very well. I entered our September M3 trade as well. This was actually entered on the 15th. And it was entered very, very strangely, and I'll tell you why. Because I have another position on, which is another M3 in another account. I had started this a little bit earlier, and I did not get into the website trade. So what I did is I just matched the website trade to where the other trade was. And if you want to take a look at the other trade, it's actually here, where on 8/12 we came in and we bought 5 broken wing condors. And then we had some adjustments. So why don't we go over that? So basically, after we pulled the August trade off, we came in here and we bought 5 970, 1020, 1030, 1070 broken wing condors, and we bought 5 970, 1020, 1040, 1070 broken wing condors, and added 1 1020 call. We came in slightly negative delta, but nothing too crazy here. And if you were to compare this to a butterfly with call spreads, we would have had 10, 970, 1020, 1070 put butterflies with 5, 1020, 1030 call verticals and 5, 1020, 1040 call verticals. So this was our entry. And as the market came down on, let's see, on the 15th here, I ended up buying 1,000 butterfly. And as it came down further, I bought another 1,000 butterfly. And this is just in the process of rolling these butterflies at 1020 down. So we're going to eventually bring our size back down, but we're well within our capital limits. And I'm just starting to safely roll down to 1,000 as the market kicks up. I'll add some more of these. I might actually end up doing some verticals and stuff because I may not be home, and it's easier to put verticals in than to roll butterflies. So we're just in the process of rolling back to 1,000. If you come in here and we come to Friday at the end of the day, we're up about $1,037, and that's on the trade I put in earlier. If you look at the trade I put on Friday, this is up less money. I'm sorry, I put the trade on Thursday. This is up less money, only about 922, but it's only about $100 less. So we got into it for right around the same prices. And I believe that is all the trades we have on, because we haven't started a rock trade yet. We're going to wait till, let's see, about 30 days from expiration. That's going to be, I believe, Wednesday. We'll throw the rock trade on. I might get in a day early or a day late, depending what the market does. If I get a spot that I don't really like the entry, I might wait a day, see if it moves. But other than that, we should be in that trade next week. And I think that's all we have for tonight. So have a great week trading, everybody, and I'll update you again next week. Thank you and good night.